yes. Welcome back, everybody, to Altcoin Daily, where you subscribe for a video on cryptocurrency every single day. My name's Austin. Happy to have you guys here today. Like the video, subscribe to the channel, and let's get weird. Let's check out the market. Right now, the market cap currently sits at about $201 billion, which, in terms of 2018, this year, it's very low. But if we think back on where the market cap was just a few days ago, it was around 191, I think $192 billion. So we have seen a little influx of cash. And it seems that we're stabilizing around this $200 billion mark, which is positive. What does that mean to you guys? Well, to me, just me looking at the market, some of my takeaways are Bitcoin dominance. It seems Bitcoin dominance has retracted a little bit. A few days ago, we were above 56%. Now we're back down to 55.8%, which tells us some of these altcoins are finally regaining some of their market cap that they've been so heavily drained of over the last several weeks. And if we check it out, it seems like the majority of the market is in the red today. Of course, we're just ebbing and flowing around this $200 billion mark. But while Bitcoin is in the red today, it seems Ethereum is a big winner in the last 24 hours, which is nice to see because they were one of the altcoins that drained the hardest these last several weeks. Ethos is in the green today, which is actually interesting to me because I'm going to share with you guys some actually bearish news coming out of the Ethos camp. But I guess some people are taking advantage of that dip today. And wow, Tether is technically in the green, but that one doesn't count. It's outrageous to me that Tether is number 8 now. But yeah, what do you guys think about this? Me, personally, what I'm looking at is Bitcoin, right? Bitcoin is the one we all care about. And the big question on everybody's mind is, where's Bitcoin headed next? Are we going up or down? Let's actually zoom in a little bit to Bitcoin over the last 4 weeks. This is where we are right now, Bitcoin 6,480. And I don't know, this is what I'm looking at. I'm not a financial advisor, but I guess we seem to be forming this nice support line at around Bitcoin at 6,500, 6,400. And looking ahead to the future, the next support lines that we want to either avoid or hit are 6,200 if this is turning into a more bearish market, or 7,000 if this is turning into a more bullish market. And I know this might be obvious, but if Bitcoin hits over 7,000, that's a sign that we're entering, the bulls are entering. If it slips down below 6,200, then possibly 6 more weeks of winter. What do you guys think? If anything, what I'm looking for is steady, healthy growth. If we get to that $7,000 mark, or above 8,000 or 9,000, I'm hoping that it's slow and steady. As much as I liked that huge, as much as we all like Bitcoin hitting almost 20K this year, what we really need is that slow, healthy growth for more sustainability. In my opinion, let me know what you guys think in the comments. Let's get to some news. And actually, let me know, what do you guys prefer? Do you guys like when we go over the market, or do you prefer news? Or do you prefer a cocktail of both? Let me know. Have you guys seen this tweet? If you don't follow us at Altcoin Daily on Twitter, it's at Altcoin Daily IO. Link in the description. Give us a follow. But this is coming out of Sam Doctor, who is a financial guy at Fundstrat, and he says, and he's just reading the chart here, so this is fact. Despite Bitcoin's bearish market, despite the bearishness we've seen for the whole year of 2018, hash power has doubled since May to 57 quadrillion hashes per second. And I'm not talking about since 2017 to this year, 2018. I'm talking about since May, despite the bearish market, the hash power in the last few months has doubled. So let's zoom in a little bit here. What does that mean? Well, first off, we were at, just in May, 28 quadrillion hashes per second. Now we're at 57, so that is doubling. In terms of what that means, well, one of the things it means is to mine one Bitcoin, and now costs about $7,300. So that means, on average, if you're mining Bitcoin right now, you're losing money. If it's costing you $7,000 plus and Bitcoin's at $6,400, you're losing money. Despite this, though, the hash rate has nearly doubled, which says a few different things. I've pulled these two quotes. One of the things it says is the increased hash rate means people are here for the long term because they're happy to just accumulate what they have, potentially even run at a loss. At the same time, they do sometimes have to clear house and dump. So essentially, they're betting on Bitcoin in the long run being way more valuable than $7,000, and brings up an interesting point where miners who are operating at either breaking even or a slight to medium loss are only keeping their machines on to accumulate crypto for the long haul. What we just said, they're all implementing that hodl approach, which I think a lot of us, or maybe just me personally, that's what I'm definitely banking on. And so this is actually a green flag, bullish news in terms of the miners. They're doubling down on Bitcoin. Sort of because a lot of miners are operating at a loss, it does bring up a point where, if you're a small mining farm, a small mining group, a lot of those guys probably have to close up shop because they can't afford it, driving out the little guy in a sense. And these big mining farms are probably the ones that are most easily able to continue. But despite that, I would say green flag for the market in general. Let's keep going. All right, sort of a red flag out of the EOS camp. Almost $240,000 worth of EOS tokens were stolen in a DApp smart contract hack. Have you heard about this? That's why I was slightly surprised EOS, we're gone now, EOS was up. I still think EOS is a solid project in general, but in terms of what happened, it was on one of their smart contract DApps. I think it was a betting DApp. And in terms of what happened, this might get a little technical, stay with me guys, but using a fake hash, the hackers were able to call the app's transfer function, externally spoofing the EOS bet system into sending them a huge hunk of EOS tokens. The hackers and scammers have since attempted to transfer the stolen booty off of the system into their own wallets by creating fake accounts mimicking EOS bet in order to trick users into believing that the casino is reimbursing customers for any lost funds. What does this mean? It just means they got hacked. And yeah, EOS bet, it's gambling, betting, DApp, I guess. I'm not on it. But this is sort of ironic because in a twist of irony, just days before the incursion, EOS bet, which is the DApp, EOS bet casino, mocked a competitor for getting hacked. They mocked them on Twitter. The direct quote from Twitter is, "Dios Games," I guess that's the one that got hacked, "a clone and competitor of our dice game has suffered a severe hack today and has drained their bankroll. As of now, every single dice game and clone site has been hacked. We have the biggest bankroll, the best developers, and a superior UI. Play on." So, they were just touting their superiority, and then a few days later, they got hacked. What do you guys think about this? Does that make EOS a bad project? I don't think so. This is a specific hack on a specific cryptocurrency, but just in terms of what this means to me, I want to share with you guys this quote from Kevin Rourke. I just found this this tweet from Kevin Rourke. This is a quote from Ben Horowitz, financial guy. I'll leave this in the description below, but this is sort of a lesson learned from the .com era of cryptocurrency for all cryptocurrency believers. And this is the quote. "It turns out," and this is referring to the .com era, "it turns out the dumb thing wasn't to invest in the scam. The dumb thing was to give up on the internet because there were some stupid people in it." Did I speak that clearly? Essentially what he's saying is, back in the early internet days, huge scam. People accused people on the internet of only being criminals and people using it for nefarious purposes. But it turns out the dumb thing wasn't getting scammed or being part of an industry that had some scams on it. The dumb thing was not investing in the superior piece of technology that the internet was back in the early 90s. That's kind of what I feel about this EOS hack, that, there will be, we'll hear more stuff like this over the next couple of years. Hopefully we don't. I feel bad for the people who lost their money, but it does not make EOS a bad project. It just means that this is the kind of stuff we have to fight. This is what's, a huge barrier to entry right now. And it kind of brings me to my last thing. Is crypto the new .com bubble? People compare where we are in cryptocurrency right now to the .com bubble of the early 90s all the time. And I want to share this with you guys. If you guys want to check out the full article, I'll leave it in the link in the description below. But, excuse me, this is just a comparison. The mid to late 1990s saw the rapid growth of internet-powered consumer markets. Sensing the next big thing, entrepreneurs and investors flocked into the space, inflating each other's ardor along with valuations of internet startups, which sprouted prolifically in the bull market. So people rushed in to invest in the internet when they saw this new technology coming up. At the time, adding a .com to a company's name did the same thing to its stock as adding blockchain does today. So back then, if you added a .com, if a company got a website, their stock went up. Same thing seems to be happening today with blockchain. You get a blockchain, your stock goes up, your crypto goes up. The Nasdaq Composite Stock Market Index was the one that tracked many of those technology companies, and it was doing great until a certain moment. At its peak in March of 2000, the index reached a value of $6 trillion. Of course, then in 2000, it was the big bubble burst. The market tanked a little bit. Of course, since then, we've gone even higher, but the market tanked and was down for years after that bubble. Well, in less than 2 years, so after it happened, in less than 2 years after that bubble burst, more than half of the .com companies folded, while trillions of dollars of investors' money just vanished. As the widespread narrative goes, the explosion of the .com bubble helped weed out numerous opportunistic players, thus clearing the way for those serious companies that had authentic ideas and truly clairvoyant visions. Today's giants like Apple and Amazon are among those primary examples. So yes, after that bubble bursts, it got up to $6 trillion. The majority, a lot of the companies that really didn't have any value folded, and of course, the companies with value, they lived on. What do you guys think? Was this the big bubble that that people saw in the 2000s for the internet? This is what I think. I think we're not there yet. I think when we look back at, let me go back here. I think when we look back at, this 2017 big FOMO, big spike that we saw, this is going to look, like this in 5 years, because we'll get to bigger heights. I don't think we are at the year 2000, .com bubble. I think we're still in 1993, 1994. But this is what I do think. And also, right now, our market cap hasn't even hit, $1 trillion yet. Their market cap was at $6 trillion when it happened. And that was primarily the U.S., the .com bubble. This is global. This is universal, some might say. But yeah, when it happens, bad companies, they'll be weeded out. The ones with value will live on. Yeah, I think that was it. What do you guys think about this? Anybody buying that dip for EOS? Let me know in the comments. Alrighty, team. This has been Altcoin Daily. We'll see you tomorrow. Like the video if you got any value.